Hello, traders, and welcome to the market opening preview. Friday, June 19th, 2015, the end of our trading week. And I have to say, it was a very nice week. Traders still have a lot of trading ahead of us. We have a full trading day. Traders is brought to you through FXCL Excellence in Trading. And please come visit us at fxclearing.com for your trading solutions. Traders, I'm coming to you live from Pattaya, Thailand. Bright blue sunny skies and white sandy beaches. Oh, what a beautiful day today. Nice and cool. Doors are open, windows are open. Absolutely gorgeous today on a Friday. Great to be with you and great to be trading again. Traders, if you would, let me introduce myself to you. We've got a lot to talk about today. My name is William Guild. I am your moderator for the market opening preview series that we do every single trading day before the London Open. Traders, I started trading in the year of 2006. In 2008, I finished a 27-year career in the fire rescue department out of the great state of Florida. Traders came to Thailand 9 days later for a 3-month holiday. Well, it's 2015, traders. I'm in my 8th year and I am still here. I guess I'm still on vacation. Traders, they do trade the Forex market every single trading day. And I am very involved with fundamentals and technicals, and I'm always looking at opportunities and probabilities on my side where I can win my trades. And traders, yes, I do lose trades. This week was not a bad week. I had a pretty good week this week so far, and we're looking to advance our numbers today on a Friday. All right, that's enough about me. Let's get the legal stuff out of the way. This is our risk disclaimer. Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Traders, most importantly, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's head over to news and commentary. Let's take a look at the indices. The US 30 closed up 1.00%, basically 1%. The S&P 500 also closed up at positive 0.99%. The NASDAQ closed up positive 1.34%. And the Russell 2000 closed up 1.32%. I think the Russell 2000 hit an all-time high yesterday in the New York session. Traders, heading on over to the Eurozone, the DAX closed up 1.11%. The FTSE 100 closed up 0.41%. And the CAC 40 closed positive at 0.27%, with the Euro Stoxx 50 closing at 0.63% in the green. Traders, let's move on over to Asia and let's take a look at what's going on now. Remember, these countries are currently trading as the Asian markets are open. The Nikkei 225 is up 0.77%. The S&P ASX 200 out of Australia is up 1.21%. The Shanghai is in the red at negative 2.04%. The Hang Seng's in the green, positive 0.78%. And the Kospi is in the green at 0.43%. That's what's going on with the numbers in our indices at the end of the New York session and the opening of Asia. Traders, let's look at our economic calendar today. Basically, we have a monetary policy statement coming out of the Bank of Japan, and the BOJ has a press conference that is sometime today. And as you know, they never give a time when they're going to do their press conference. It's always a secret for them and us. We never know what they're going to do. So we do have that coming out, and I think that's probably the biggest news data that we're going to have to watch today. You know, as Kuroda's been talking quite a bit, their finance minister, and so it's kind of interesting to see what they have to say in their press conference. In New York session, the only high impact data we have is core CPI and core retail sales out of Canada today. And that is it for our high impact data in the US session, ending our trading week. Saturday, June 20th, there is no data. So if you wanted to hold a trade over the weekend, I think you're pretty safe in doing that. The only other data that's worth mentioning, which is a medium impact, is FOMC member Williams is speaking today. Commentary. FOMC really rattled the markets a little bit. The markets didn't like what Fed Chairwoman Yellen said. Auntie Yellen, I didn't think said anything that was any different than she says any other times in the past. I think they're going to do what they're going to do. I don't normally listen to the gurus on the financial channels on TV, and I did yesterday. And now the big debate is: are they going to raise interest rates in September, or are they going to raise interest rates in December? I vote for both. I think we're going to get 2 rate hikes before the end of the year, and I think they're going to be small rate hikes. But I think we're going to see the Fed raise rates both September and December before the end of the year. So I'm on the side of 2 rate hikes. If they don't raise interest rates in September, I'd be surprised, and then you can pretty much bet 100% that there will be a rate hike in December, as Auntie Yellen, as I call her, has said they do intend on raising interest rate hikes. So we are expecting these to happen. We just don't know when. But I'm saying September we're going to get a rate hike. The charts reacted. The dollar dumped. I mean, they really dumped the dollar on this FOMC statement. I don't know why. I mean, I don't think there was anything surprising that came out of the Fed as far as interest rates and what they're going to do and what their roadmap is. I think they're right on track. I think they've been saying it for quite a long time. But for some reason, the markets didn't like it. And we've seen a lot of our currency pairs go in the opposite direction of their trend and what they've been doing. And we continue to see that. And you'll see in our 60-minute Forex charts that there's been quite some movement and some opposite movement. And now, we are hoping to see things come back to normal. But just to go back and reiterate that it's Friday, there's a lot of pips out this week, and people are going to be taking profits, position squaring. So be careful of that as you go through your trading day. All right, let's start off with our euro dollar as we do every day. And, I'm bearish on the euro dollar. Now, if you take a look, I placed a dotted line on the top of this chart. That is resistance on the daily chart, okay? So I am expecting this to break this this trend line, give us a retest. And, the euro is really good about giving you 1 or 2 chances. So there's a good chance we'll get a retest and then a second retest. And then we want to sell this at 1.1352. And basically, it's a wide open space. There's really nothing in the way for this trade to go down. And we want to take profit at 1.1271, which is a 200 exponential moving average. And we could take some nice profits there. I think this is a really simple trade plan. The only other issue is that this is going to bounce off the trend line and go to the upside, which can happen. I don't see that. I don't see that happening. I think this is going to continue to be bearish. I'm bearish in the euro dollar. There's no change of trend. It hasn't taken out any significant levels on the daily chart. So we remain bearish, and we will keep our trade plan according to that. Traders, let's move over to the pound dollar. What a great currency pair this has been for the last, almost 3 weeks now. This has been bullish. And again, yesterday, trade plan worked out beautifully. And we're going to just keep on doing what we've been doing. And we're looking for 61.8 Fibonacci pullback. And that's at 1.5873. We're looking for an entry. However, we know the pound doesn't like to give us pullbacks, as we say every day. And the 200 exponential moving average is really of no concern. It's way below price, so we don't have to worry about that. And what's the worst that's going to happen? This is going to break through that 100% level of the fib, and we'll just take it up to 60.47. So either way, whether we get the pullback or we don't get the pullback, we get a bullish engulfing candle. You know what? I'm in. So about 2 hours before the London Open, I would suggest you get in front of your charts and just take a peek and see what's going on. And I know those of you on the east coast of the United States, it's really hard because that means you're up at midnight, 1 in the morning, to take a look at that before the London Open. I know it's not easy. I did it for 2 years before I retired and came to Thailand, so I know what it's like trading all night and into the next day. All right, let's take a look at the Aussie. This is one of these pairs that absolutely baffled us, and just yesterday just bounced off the 200 exponential moving average and just took off. And now, this is bearish. I mean, if you look at the daily chart, it's just bearish, and there's no reason to say that this is going to continue to the upside. I don't see that happening. I want to sell this. It's at a spot where we're at right now at the 38.2 Fibonacci level at 0.7790, and I want to sell this. So I'm looking for a bearish engulfing candle, and we'll take this down to the 200 exponential moving average at 0.7739. And I think this is a great trade plan. I don't think we have too many problems there. I think it's a wide open space also. Another clean chart to trade. Price is where it's supposed to be. You can see where the 161 extension is on the bottom of the chart. No traders, the fib is done correctly. It's called a reverse fib. And the reason I do a reverse fib is I always want to see the 161.8 Fibonacci level, which is always my maximum take profit area. So the fib is just reversed, and that's why you're seeing the way it is. All right, let's head over to the Euro Aussie. Now, this pair has been all over the place. And, this pair is bearish if you look at the daily chart. It's an ugly chart on the daily. It's an ugly chart on the hourly here. However, my concern is that, this had a pretty big move to the downside, which I expected. We've been bearish in the Euro Aussie for a long time, and we remain bearish. If you look at the top of the chart, you'll see that dotted line. That is resistance on the daily chart. So we're quite a ways from resistance on the daily. So we have no issue there. We have plenty of room to work. My concern is that this is a valid trend line. It's a 4-touch trend line, and there's a good chance this is going to bounce, and this is just going to head to the upside. And you're just going to have to make that decision if you want to buy this, and just realize that that is a counter trend trade, which is fine if you want to do that. I am more conservative. I want to stay with this trend. I want this to break the trend line in the 200 exponential moving average, and I'll start to sell this at 1.4525. Do I think this is going to happen today? I don't know, traders. We got a lot of data. We don't have a lot of data. We have important data coming out with the BOJ in its press conference, and that will move the market. However, if it doesn't move the market, there's a good chance it's just going to go sideways for until we come to our next Asia session after our weekend break, and then that'll be the end of it. But I really would like to see this break this trend line and also the 200, and then we can sell this. I want to take it down to 44.58, which is previous support. And I think this is a pretty decent trade if we can get through this. Or it's going to bounce, my friends. And it just might come up to that 46.35 area, which looks like the next point in resistance. So it might come up to that area, and then we can sell it from there. So either way, I think we have our trade plan to sell this pair, whichever way it decides to work. I think we'll be fine. All right, traders, let's go take a look at the Euro Yen, one of my favorite pairs to trade. This has been absolutely in a range. And if you look at the daily chart, it's been in a range for quite a while. It really hasn't shown its true colors. And the last 2 days have been bullish. I don't know what happened in New York that caused that big candle with that big spike. I don't know. I think they had Philly Fed Manufacturing Index in the New York session. Which was late for me. It was 11 p.m. for me, and I was not at my charts. So that's the only thing I can think of that candle came from was that number that came out. And, it came out at 15.2, and they were expecting 8.1. So, okay, that answers that question. So that big red candle is from the Philly Fed Manufacturing number that came out yesterday in New York session. However, I want to sell this. I don't want to buy the Euro Yen. My bias is bearish. This is a bearish pair. However, the yen is weak, and we have to realize that. And so, my bias is I want to sell this at 139.72. We're going to take profit at 139.17. It's a nice 45, 48 pip trade and get out. However, I don't want to lose an opportunity if this decides to break 140.14, 140.10. I'll take this to the upside. Now, I've placed a dotted line showing you resistance, and we're not too far from resistance. So this is only like this is like a 25 pip, 30 pip trade. So this isn't a lot. This isn't a big trade. You don't have a lot of room to manage here. So if you're going to take it counter trend to the upside, just be really careful with that, and of course watch your economic counter for data releases. I only talk about high impact data, but there's other data releases that are coming out throughout the day. All right, let's head on over to the New Zealand dollar, our last currency pair. This has traded really nice this week. I have to be honest with you. It's given us some nice moves to the downside. We're bearish in the New Zealand. It went up. New York took it up. Usually the Euro session takes it down, and we're back in the same position here. I'd like to see this pull back, though, to that 50% fib. and give us a nice pullback to the 0.6945 level, and we can sell this. We want to sell the New Zealand dollar. I do not want to buy the New Zealand. The Kiwi is very weak. They've had bad numbers for the last month and two, so there's nothing positive that's come out of the Kiwi. So we would definitely want to sell this pair. We don't want to buy it, no matter what it does. If it goes up, it goes up. It's going to go without me. Of course, I want to sell this, right? So, and that wraps up our 6 currency pairs on a Friday. Traders, on behalf of myself, William Gilday, and our great friends at FXCL Excellence in Trading, I want to thank you for joining us this week for the market opening preview series every single day before the London Open. Traders, don't forget, sometime after the New York close, we will have the Friday wrap-up, which will be put up, and that's where I go over about 15 daily charts. We just look at price action and what we might expect for the week ahead. Traders, have a great trading day, and always remember to trade smart and not hard. Traders, take care, and talk to you next time. Take care now. Bye-bye.